Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Jonathan Twomley. How you doing, sir?
I'm doing great, Michael. How are you?
I'm doing well. We're going to do a quick pivot on topic number three. Take a topic you and I were doing off air and actually just put it out there and let people respond. And this is about really what's going on at the Fed, right? The Fed is causing some pain. They told us it was coming at Jackson Hole. Congratulations, they're delivering on what they said. But I do think there might be a bigger mission, a bigger thing that Jerome Powell and his cronies are doing. So I thought maybe we should talk about it. We may or may not agree, which is awesome. So what do you see? What do you see? Is there a bigger theme that he's going after?
Well, first of all, I want to say congratulations to Jerome Powell for being a politician who delivers on his promises. I mean, we never see this. He said pain is coming, and he was right. So
he didn't lie. That's right. He delivered.
So kudos to him for that. He really came through on his promise, right? So,
funny. That's funny.
But on a more serious note, I mean, I personally think, and this is just my own personal view, right? It's not, you can dispute it. You can say I'm full of it. You'll probably be right. But I think that there has been a group within the Fed that has long objected to the easy money policy, and they went along with it because they try to put on a common front. And maybe in the short term they thought that it was necessary, but their bias, their kind of professional education tells them that these low interest rates, for as long as we've had them, are bad for the economy. They create a lot of problems. You can trace a lot of the inequality that we have now to interest rates. You can trace the run up in the cost of housing to artificially low interest rates. And that's caused a lot of pain. It's benefited a small number of people, and it's caused a lot of pain to most Americans. And I think that Powell and other people on the Fed realize that they need to get interest rates back to a more historic level. And and then of course, then there's always the issue of like, well, what happens if you have a real recession? You have to drop in. You got to have some place to go, right? To juice the economy a bit. You got to have some cushion there. But I think that the larger thing is that they need interest rates to get back to something like normal. And I think Powell has even sort of hinted at this, saying like the cost of housing is too high. They need to kind of break the back of the housing bubble, the long-term housing bubble, right? So I think that, but politically, it's been very difficult for them to raise interest rates, partly because under the previous couple of Fed chairmen, they let it go on too long. The markets became addicted to low interest rates. And when they tried to raise in 2018, 2019, when they thought that, hey, the economy is strong enough to absorb it, which frankly it was, but Wall Street threw a hissy fit, right? Yeah. And the Fed got scared and they backed off and they lowered interest. They went back to lowering at that point. I think now they see their opportunity with inflation. Now they have political cover because people are screaming about inflation, and that is drowning out Wall Street, right? Because people, no one really cares about Wall Street's profits being down when like everybody is paying $5 a gallon or $6 a gallon for gas, right? So the Fed realizes that they've got a chance now to, under the guise or under the under the guise of breaking the back of inflation, right? They've got the cover to go and like do something dramatic with interest rates and cause pain to like the people who would otherwise, have them by the throat and be able to prevent them from doing what needs to be done. So that's what I think is going on here, but I don't know how you see things.
It's kind of similar but different. I think one of the things that Powell wants to get rid of is what Wall Street calls the Fed put. I think he's an intellectual. I believe he's an attorney by training, I believe, or a lawyer, and I think he looks at, again, using inflation, like you say, as the cover. He wants to kind of break the connection that when Wall Street throws a hissy fit, the Fed bails him out. And there was a billionaire on CNBC yesterday, Barry, I'm going to mess up his last name, Sternhalt or something like that.
Sternick?
Yeah, that guy. basically, Capital Partners or whatever he's the CEO of. And he's out there complaining, the economy's going to crumble and blah, 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 blah. And I'm like, I don't know who this guy is. Let me look him up. And sure enough, he's a multifamily, real estate guy around the world. I'm like, well, no wonder you're complaining. The Fed's coming after your business, right? You may have variable rate debt. You may have bad assumptions. You may be in Warren Buffett speak swimming naked and don't have the right debt. I'm not saying he does, but I'm just saying maybe you're uncomfortable because, the Fed is taking away the punch bowl and maybe there's a lot of people that got addicted to bad debt. They got less discipline. They did lots of things that work in a low rate environment that don't work in a normal, let alone a high rate environment. So yeah, so for me, I think Powell is trying to get the Fed back to Volcker world, not Volcker rates, but Volcker world where the Fed was independent. It wasn't perceived as political influence. Because again, Volcker stood up to Reagan. Reagan begged him to lower rates, and he didn't. My suspicion is, if it hasn't happened already, it's about to get really loud for people, beating on Powell. And I don't think he's going to. I think Powell knows that if he's not already, he's soon to be the most hated man in America because of what he's doing. All right, unemployment's going to go up. Pain is coming. Stocks are going down. Pain is coming. All assets, are being popped. And I think he's got a pretty good backbone. Again, I could be wrong. But yeah, I think he's trying to get rid of the Fed put, if you were to ask me what's the main thing.
Yeah, I mean, I think that makes a lot of sense. And if you look at sort of the negative effect of, low interest rates, like we've talked about before, it's like giving people like amphetamines or something, right? I mean,
it's giving a small set of people amphetamines and the rest of us pay for it. Yeah.
Yeah. And it has really caused misallocation of capital.
Exactly.
Right?
Exactly.
The money has gone into bad stuff. So it's gone into stock buybacks. It's gone into,
non-productive,
stupid investments, and when you have a risk-free return that you have to beat, right? That's 4 or 5%, like what you used to be able to get on a T-bill. It makes people think about where they're going to invest money. It forces people to make better decisions. When you've got essentially free money, then it doesn't really matter. They'll just throw money at everything and hope some of it sticks, right? And then when a couple of things stick, then they call themselves geniuses, right? And you see, it leads to speculation and everything. It's responsible for stuff like, cryptocurrency, right? I mean, crypto has a time and a place, and blockchain is a real thing and all sorts of stuff. But like Bitcoin at $60,000 or all this crazy stuff, it's going to be $1 million, like that. It was driven entirely by the fact that people could not get yield by just buying a T-bill, right? They could not, and they couldn't find assets to buy like houses because they couldn't afford them. All the traditional ways that people would save money for the future were taken away from them because low interest rates essentially, made it easy, for the people who already had an easy time getting money. It just made it easier for them, and it's basically screwed everybody else, right? So, and I think that, maybe I'm sort of reading too much into Powell, but like, I agree with you. I think that there's the idea that we've had too much misallocation of money, too many bad investments, too much good money following bad money. And
Great.
That we have to get back. There needs to be some, baseline against which you compare all investments that is higher than zero, right?
Yeah. So if we play this out, right, because everybody and their brother is talking about a Fed pivot now, right? They're all begging for, because again, there's real pain going out. The people who had misallocation, people who have interest, variable interest rate. There's real pain going out there. A lot of it's kind of bubbling below the surface. I think it's coming out. So we obviously have 2 more Fed meetings. I think we get a 75 November 1st or November 2nd. I think we get a 50, which will take us, I think, to 4.25. Right, we're at 3. Yeah, it'll take us 4.25 to 4.5. We might get 75. Bostic, Fed President Bostic, just talked about, hey, let's get to 4.5 by the end of the year and then pause. Again, Wall Street, as you know, is forward looking. That that's 2 months away. That could get Wall Street excited again, because of course what Wall Street's going to guess is, hey, a pause, then a cut. I don't think a cut's coming. I just don't see it.
Good investors, they don't need to know they don't need cheap money. They just need to know what the horizon looks like.
Correct.
Right?
Yes, exactly. Yes.
And I think it's funny. I was asked a question last night on my monthly coaching call, about when do I think the Fed is going to lower rates again? And like, when does, and people talking about, that it's 18 months between the last Fed rise and the first Fed cut and all that kind of stuff. And it didn't think about it last night, but it just made me think right now that there's like an entire generation of investors that basically doesn't know how to invest except with cheap money, right?
Exactly. Yeah, 15 years basically. Yeah.
Right. And the thing is, like, it actually doesn't matter what the interest rate is, right? The interest rate is actually irrelevant, except if you buy in a low interest rate environment and need to sell in a high interest rate environment, that's bad, right? And the opposite is really great if you're able to pull off the opposite. But what is the best for everybody is a stable interest rate environment over the long term, where you're not gaming interest rates all the time, right? I mean, there's going to be some fluctuation, that's normal, but
at the margin, not standard deviation moves. Yeah.
But you're not talking about these massive moves that are essentially created by like too much cheap money for too long a period of time, right? And but so many people have kind of internalized this idea that the only way to make money in real estate is with super cheap interest rates and appreciation only, right? And, that they don't understand that, like, you can make plenty of money in a normal interest rate environment, because what's going to happen? Prices will adjust to reflect the reality, right? So, and you just have to, as long as you do your underwriting correctly, right, and don't overpay for stuff, right, you'll do fine, right? But I think
I agree.
But we're in a transitional period right now, and those are always painful, right? And for people who know nothing but cheap, if you're 35 years old, right, you have never invested in an environment other than a low interest rate environment. You have no memory of like treasury bills being a normal part of your investment portfolio, because they were stable, you could count on them, and they were going to pay you 5-6% interest, right?
Agreed.
So they only understand like the speculative environment that's created by super low interest rates. And I, for one, would like to see that environment. And I know it's going to be painful, but I would like to go back to something, resembling more of a, sort of hard money and more sound money and,
I agree.
stable interest rates. Yeah.
Yeah, and again, I think Powell, would obviously never say that out loud, but I think that's what he means by pain is coming. He understands that over the last couple of years, there's been misallocation of money for a long time. Stock buybacks being a great example of it, but it got hyper in the last 2 years, and there's lots of little train wrecks. There's some, there's a lot of car wrecks. There's some train wrecks. There's just some bad stuff that we have to get through. And again, where that happens, there's opportunity, right? If you're prepared, if you're educated, there's going to be some great deals coming. So I'm excited.
Yeah. And look, I mean, you and I have talked before about, the problem with the Fed in the past has been they've tried at all costs to avoid recessions, right? And recessions are, and we've
part of the business cycle.
We've made the analogy that, like, it's like the same as with forestry, right? If you let the small wildfires burn, right? They burn up, they clear out the underbrush, and they basically make the big wildfires impossible, right? And the same thing is with recessions. Like, they have the small business cycle recession, it cuts out some of the dead weight, right? It forces the marginal businesses to fail and release the resources for better use elsewhere, right? But what happens if you don't have that brush, that undergrowth just gets bigger and bigger and bigger. And then when you got a spark, you had a lightning strike, then you have a conflagration, right? And so, and now we're seeing the conflagration. We saw one in 2006, 2007, 2008, and then the Fed went and just repeated its mistake again, right? And we're seeing it again now, because the Fed could not allow the business cycle to function normally, right? So hopefully, what we'll see now, and this, maybe there's a lot of things that are kind of happening all at once, sort of like reshoring, less dependency on China. Like, all this stuff is actually going to make life more expensive for Americans. However, like, it might also make them better for
Oh, I think so.
right?
I think, yeah, reshoring. I mean, all of this stuff, again, I go back to the 70s. I think we could have a 5-year period where inflation is above trend. Hopefully it's not 8 or 9%. Because again, reshoring manufacturing, it's like Micron just dropped 100 billion in New York. It's just all of this still going on, which is net positive long term,
right.
but will be inflationary in the short term. And yeah, I hope Powell gets rid of the Fed put.
Yeah.
I really hate that Wall Street has learned that they could grab the Fed by the throat, whine and cry like a little baby tantrum, and the Fed will pivot. I hope it doesn't happen. I hope he has a backbone. I hope he delivers. So, Jonathan, this has been a lot of fun. Where can people find you?
Yeah, so I've already pushed my checklist, which you can go back to the other episodes and check out if you want. But you can also join my Facebook group, which is free. It's called the Multifamily Investment Community. So, please not Google it, go to Facebook and search for Multifamily Investment Community. There are some questions that you have to answer. There is a bot that will reject you if you don't answer the questions. So make sure you answer the questions to get into the group. But once you're in, love to see you there, and we can continue the conversation there.
Yep, I love what you do there. I love what you do. Monitor the group. I'm a part of it, folks. Also, if you do join, let him know you came from one rental at a time, so he knows that his time here every week is valuable. Thanks, Jonathan.
Thanks so much, Michael.
Mhm.